Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. In today's video, I will be speaking about gold. Now, the reason for which I'm breaking down exactly gold is because it's definitely time to make an update and see what kind of situation we currently have in the gold market, because I've been requested a lot to make this breakdown. So now it's time to see exactly what we have and see how we can be looking to potentially capitalize on the next move for gold. Now, as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this pair and market, actually commodity. We will then go and see what we have from an order flow perspective. So we will be seeing what the biggest banks and institutions are doing in the gold market. And obviously, if you're able to track how they are shifting their positioning in time by using the commitment of traders, you do have an advantage over your competition in the market. And by the end of the video, we will know where we can be looking for the next opportunities on gold. So without further ado, let's get straight into the analysis. Now, starting here from the monthly time frame, what we can see is that the market has just created a nice impulse and correction. Now, generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just tested exactly the 50% of the Fibonacci taken on the impulse, and currently the market is testing the 0.382, which is the next Fibonacci level. So at the moment on the monthly, what we're doing is we are testing the Fibonacci levels one by one. Now, when you see that the market creates an impulse to the upside and then creates a retracement, and to measure that retracement, you place your Fibonacci, and you see that the market is moving step by step by touching the Fibonacci levels. Let's say, for example, the market first tests the 0.786, then breaks above the 0.618 and goes and tests it again, breaks above the 50%, goes for another test and breaks above the 0.32 and then goes for another test. From here, you expect the market to create a big move to the upside. That is simply a very common pattern in the market. The market is testing the Fibonacci levels one by one. And in this case, what we see is this exact same pattern. The only difference is that here we have started from the 50%. So first, the market tested the 50%, and now we're testing the 0.32, from which we can expect the market to provide the rejection to the upside to complete this impulse correction, and impulse pattern to the upside, possibly for the creation of a higher high. Let's go down on the weekly time frame and see what we have from a weekly perspective. Here on the weekly time frame, what do we see? Now, from a weekly perspective, we can see one very important thing. We can see that in all this move to the upside, there is one candle which is not related to the move, which is exactly this red candle here. Now, if you have an impulse to the upside and there is one candle not related to the move, so of a different color, that candle is a structure candle. In this case, since it is a red candle, it means that the market at this area had found resistance. And as you know, in the market, previous resistance, once it is broken to the upside, is turned support. However, the market, when it went for the retest of this previous resistance turned support, failed to treat it and to reject it as a support area and broke again below it. So at this point, what we can expect is for this area to act as resistance. Since it is a previous resistance area, which, now that the market is approaching it from below, should be acting again as resistance. So on the weekly, we're testing very strong resistance, and we do expect the market to provide a rejection to the downside, which means that the monthly and weekly timeframes at the moment are showing two different scenarios. The monthly is bullish and the weekly is bearish because it is below resistance, and we can expect the market to reject it to the downside. Going down on the daily time frame, what do we have? Now, on the daily time frame, we have a completely different scenario. Now, I had spoken about gold quite a few times in the past. I spoke about gold after the market had provided this impulse to the upside. When the market was here, I made a full breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside, and in fact, that is exactly what the market did. Then, we had the creation of this head and shoulders, and when the market was here, I made another breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside, and again, that is exactly what the market did. Then we had the creation of this W formation, and when the market was here, I made another breakdown explaining all the reasons for which we wanted to see the market create this move to the downside, and again, the market gave us that move. Then we had the creation of this overextended W formation. When the market was here, I made another breakdown explaining why from here we wanted to see this move to the downside, and again, that is exactly what the market did. And then we had the creation of this overextended W formation, and from here I made a full breakdown explaining why we wanted to see this move to the downside, and then when the market was here, I explained all the reasons for which, if on the 4 hours we would have seen a shift of structure, we could be looking for the move to the upside. However, from a 4-hour perspective, the market didn't change at all. In fact, the market simply continued with the move to the downside. In fact, we didn't even add gold on our watch list with students when the market was here because everything remained bearish all the time. So there was absolutely no reason to be looking for any kind of longing opportunities. And in fact, the market created the move to the downside. And after the move to the downside, when the market was here, I explained again all the reasons for which we wanted to see this move to the upside. And by the way, I will link in description all this previous analysis. You find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on gold? Now here on gold, from a daily perspective, we have just created a nice impulse and correction. Now, generally speaking, after an impulse and a correction, you expect the market to provide the continuation to the upside. So how we will be approaching this situation that we have just seen? Now, before I show you that, let's first go and see what we have from a COT perspective. So commitment of traders perspective, which is what hedge funds are doing in the market. Now, what we can see here is that with the last reports, net positions have decreased from 279K all the way down to 246K net positions. So we had a quite massive decrease of the net positioning, and we can see the shorts have just reached 60.8K with longs reaching 307K, meaning that the longs have been massively decreased while the shorts just a little bit. So we are starting to see some profit taking, and this is quite low compared to the high amount of longs that we had so far on gold, meaning that at the moment we can expect some weak gold, specifically because on the weekly time frame we are at that weekly resistance. But there is one very important thing to mention: no shorts are getting added. So even if we will see some, let's say, weakness of gold, we can't expect it for the long term because there are no shorts getting added from an institutional perspective. This is just profit taking with 36.7K longs getting closed and 5.7K longs getting closed. So what is happening is that hedge funds are taking their profits on the massive longs that they had on gold. And in fact, that is the reason for which the market is showing this retracement. So we can expect the market to create a continuation to the upside as we wanted to see on the weekly, on the monthly. However, on the weekly, we have that weekly resistance that we have already spoken about. So how we will be approaching this kind of opportunity and situation with students? Now, as usual, we will be reactive and not predictive. At the moment, the different timeframes are not aligning because on the monthly and daily, we want to see a move to the upside, but on the weekly, we have resistance. So we will have to wait also for the weekly timeframe to align with the other timeframes in order to have a high probability setup. So what we will be waiting for with students is for the market to break all the structure to the upside, including the weekly resistance. Only after the market will have broken and closed from a weekly closing perspective above the weekly resistance, at that point, that weekly resistance will be turned support. Also, this daily resistance will be turned support here. So only after the break on the retest, this is exactly where we will be monitoring price action with students for a nice trading opportunity. And how we will be doing that? Well, as usual, Monthly, weekly, and daily are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So inside of this area with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and create a higher high. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.